What is up, YouTube? It is your girl GC the Trader, and we are back with another breakdown, you guys. I hope everybody is having an amazing day. It is Monday, November 24th, 2025, and this is the beginning of the last week of November, you guys. So yes, we are officially at the end of November. So, of course, these markets are probably going to be a little crazy. Especially, closing out the month. You get what I'm saying? Getting ready to get ready for the new year. So, when we went into the markets today, we didn't do anything crazy. So, today's breakdown is just going to be over what happened in the market today. I was able to catch a forward test during a forward test trade during London. So, we're going to go over that. And then I'm also going to go over what happened during New York's trade session today, you guys. So that's what today's background is going to be over. I'm not going to hold y'all, so let's get straight to it. Okay, as you can see, you guys, we are on our hour chart. I trade in Q, so that's the chart we're on right now. So when I came into the markets, initially, this is what I seen, but I went to my hour. I marked up my key levels. I marked up these levels too, just in case price decided that it wanted to sell off. Because when I did come into the market today, price was consolidating during during the London session a little bit. So really didn't know if NQ was going to sell off or buy today. So I did mark up these zones just in case. And these was the only zones I initially marked up. And then I had these two zones up here, key levels marked up here. But these levels up here, that was not marked yet. I did that after price broke through these key levels. So let's zoom down to where we initially came into the market at. All right, let's see. Okay, let me bring this bubble down, you guys. Okay, I think I moved that order. Let me go ahead and delete that. That was an order I had set up from earlier. Yeah. So, all right, you guys. This was the forward test that I had caught a little bit during London. This right here, I can get rid of that. I just had that marked because that's where I came into the charts and where I started looking at. But this is what I initially seen when I came into the markets. I saw that once I dropped down to my 30-minute, that it did line up between two key levels. So I end up marking this demand zone because it dropped past which key level, I believe. It wasn't this one. I marked this one up later. I believe it was this key level. Yes, because price when I initially was ranging between this key level and this one right down here. And when price dropped, I seen that initial drop. I marked this key level too because that was the next initial range that price was ranging in between before price made that higher high and dropped down. Once price did that, it gave me a demand zone as it was pulling back into the my previous key level. I marked that. I dropped down to my 5-minute. Let me go here. Move that. I dropped down to my 5-minute. Initially, when I entered in the first time, I entered in right here. And as you can see, this is where I seen the tap into that 30-minute. I dropped down to my 5-minute once I seen the tap. Once I got the break, I entered on the break of this candle, but as you can see, that was an early entry because the next candle ended up stopping me out. It's Monday, so I was only willing to risk $50. So it ended up stopping me out right here. I waited for another pullback. Actually, I went to my 15-minute. Yeah, I went to my 15-minute. And once I saw that, okay, price was still pulling back. And I saw that once that 15-minute, this candle started breaking. Once this candle was getting close to passing my tap candle on my 15-minute, that's when I dropped back down to my 5-minute and I entered on the break of this candle right here. I entered right there and I held all the way to TP3. So yeah, that was a good, nice little forward test trade. I like to take little forward test trades before I initially trade the New York market, just so I can get a feel if the bias I have for today is actually going with it. And after this trade, I was like, okay, in Q, we may be buying off today. So initially, I seen price dropping down in between these two key levels. So I went to my hour. And once price passed this key level, I marked up that hour, dropped down to my 30 minute. It also lined up with my 30 minutes. So I was like, okay, that's perfect. It lines up with my hour and my 30 minutes. I was like, okay, drop down to my 15 minute. And I was like, okay, I even have a 15-minute demand within a 30-minute and hour demand that's within a key level. Price broke through the key level. Initially, I could have got in. I'm going to show y'all. For this 30-minute right here, let me remove this 15-minute real quick. Okay. So on this 30-minute right here, initially I saw when price did this minor breaker structure right here. Let me go to the actual 30 minutes so you can see it better. There we go. I didn't know I was still on my 15-minute chart. Okay, so on this 30-minute, when price did this minor break of structure, when it broke through that key level and made a minor high right there, price retraced all the way down in here. Initially, when price broke back past here, I could have entered because this was technically a retest and price never invalidated my zone. But it's Monday. I wasn't trying to go for a minor breaker structure. I wanted price to pass this key level. This was the last key level I had marked on my chart. I marked this key level later, but this was the last key level I had marked on my chart when this move started happening. So I wasn't really comfortable with a minor breaker structure. And of course, price just broke through a major key level that, as you can see, price haven't been able to break through that. So because price hasn't been able to break through that, that's the initial level that I wanted price to break through. I didn't too much care about, this key level that price had just formed when it did that major drop. I was more so concerned about this key level because that was a strong key level that price could not break through. So that's the initial move I wanted to happen. So once price broke that key level, I dropped down to my 15 minute. Hold on, let me go back, you guys. Hold on, I'm just trying to get my 15-minute back to where I had it. There it go. So yeah, I dropped down to my 15-minute. I dropped down to my 15-minute, and I was like, okay. Once I saw price starting to retrace back down, I put my long position. I dropped to my down to my 5-minute so that I can get a better entry. Let me make this a little more smaller, you guys, so you can better see. Okay. I dropped down to my 5 minutes so that I can get a better entry. And as y'all can see, price never came to tap me into the trade. It never came to tap me into the trade. It like 3 ticks away, you guys. It was literally 3 ticks away, and it didn't tap the 15-minute. It didn't tap my hour and 30-minute. Once price reacted off of this 5-minute, it just shot. It didn't even come to update to tap this 5-minute. It just left all of this high probability there waiting. And last week I was only trading ICC, and I told myself that I didn't want to be a switcher. So the main reason why I chose the ICC concept was so that I can better find, high probability supply and demand setups, because supply and demand has been a strategy I've been trading since I went live. And I've been live for over 6 months now. So my whole entire trading journey is 9 months now. But outside of the learning curve of the, 3 months on TradingView, I've been live 6 months. And since I went live, I've only been trading supply and demand. So I was like, okay, this week I'm going to follow my plan and do ICC with supply and demand within the confluence, because last week I wasn't. And I'm not going to say that's why I took all L's last week, but initially some of those trades I wouldn't have took because it wasn't a supply or demand within that trade. But I was getting a feel for trading ICC just to see if that concept actually, you get what I'm saying, could make me some money and make me some profits, and I was able to catch some good trades on it. So this week I said, I'm gonna wait for the ICC to give me, the confluence I need to take the supply and demand. And this all happened within an ICC continuation. So I was like, okay, great. This is going to work out. And nope, it only hit ICC. It only from that zone, because as you can see, if we come over here, well, let me go down to my 30 minutes so that you can see it better. As you can see, this was the last major movement right here. So it's buyers and sellers sitting right here in this zone in between these two key levels. So based on ICC, if I was only trading that, I already knew that it was a probability that price wouldn't retrace all the way back into this key level, that this will be the high probability zone right here that price will trace to. That's why I was comfortable with this demand, because it had multiple time frames, and it was literally, my entry point was in the zone, like literally right here. It was within the zone. You get what I'm saying? But I'm working on following my rules and following my plan. And for supply and demand, if it doesn't tap, I'm not gonna get in, because in the past it did not work out, me not waiting for the proper tap. So I'm gonna follow my rules. And I was like, hey, it didn't tap. So I waited for another setup. It was a demand setup that formed in here. I saw it happen. It was right here. I seen this demand setup form, but because it was so choppy in here, I did not feel comfortable taking this demand, especially when price had already tapped it and it wasn't enough momentum for that tap to break structure. So initially, coming down to it being tapped twice, I too much don't like taking trades off of a zone that's been tapped twice, because if it was a strong zone, the first tap would have been enough. So I try to stay away from zones that's been tapped twice, because that's a low probability zone. But I saw this form and it worked out. But also, in price tapping this zone, I also saw price respecting another demand zone. So instead of me worrying about that one, uh, I marked up this demand zone. Now, yes, if I would have marked it up like this is the tap. I could have entered at the break and we could have made some money today. But I did not have that zone marked up. This is the zone I had marked up. This is the candle that I chose for my zone. That was the one I was more confident in. And it just worked better for the risk amount I was willing to risk. This zone was just too big for me to feel comfortable enough only risking $50. But with this zone, I was comfortable enough with risking $50, especially when this was the initial candle that gave me the push to even that break that high right there. So when price came back down, yes, right here, it gave a minor breaker structure right here, came back down to retest, and then, but as I said, it was Monday. I was not trying to enter on minor breaks or structures. So no, I did not enter right here, which I could have, but I did not enter. But if I had this marked up, price would have hit there. It didn't. I was like, okay, I didn't have that zone marked up. I'm not going to sit here and worry about anything. I was like, hey, price also broke through a key level. It's coming back down to retest it. This was an ICC trade. I could have took that just based off of ICC, but I'm trying to take ICC trades and confluences of supply and demand. And when this ICC trade happened, it didn't even dawn on me that it was happening within within the demand setup. So I didn't take that based off of me just not necessarily being aware in that moment that, yeah, demand just played out and now ICC is playing out. So I'm not even going to take that as a missed move, because in that moment I wasn't even thinking about that. I just reset, got me another demand zone right here, and I was like, okay, this is the pre-order I had set. I was like, all right, if price comes back and tap me in, I'm targeting I wasn't trying to target the high. I was trying to target a little bit in the high because I already know how far price has moved, that we were probably looking at a retracement to come soon. So I really didn't know, and I didn't know if this was the top or a continuation. So I wasn't trying to be greedy if price did come in to tap me in. But when price just continued to range right here and start to become choppy, I was like, all right, it's cool. I'm gonna call it a day. So yeah, you guys, today was a no trade day. I'm gonna put my P&L calendar right here. We didn't make any money today, but we also didn't lose any money today. So whenever we're able to trade and not lose any money and walk away, then hey, we all know that's a win, because that means capital's protected and we have more opportunities to take some trades later on in the week if the market presents itself. So yeah, you guys, that was NQ for today. We had a beautiful trade ideal that, as you can see, it would have played out beautifully if NQ would have came and tapped me in. But hey, it is what it is. We can't make money every single day. We just got to show up and try. And today we tried. We followed our plan. We did the best we could. So hey, we're going to walk away with our head held high. So I hope everybody had a great Monday, was able to make some money and find some great trades and setups, whatever pair you trade. And if you took an L today, hopefully it wasn't an L that was bad enough to blow your account. But if it did, hopefully you learned from it and you can, rebuild yourself, buy another account and get refocused, and at least try to end the year in some good payouts. I know that's what I'm going for. So yeah, you guys, that's it for today's video. Thank y'all for sitting down and listening to me and keeping me company. I greatly appreciate it. So, peace, love, and your girl GC is out.